About screener, how to use screener, and why screener is very important in terms of investing, trading. Okay, basically while investing we have two methods. One is fundamental analysis and technical analysis. Basically, to do fundamental analysis, we need the quantitative one and qualitative one. What is basically qualitative and quantitative? Okay, basically, qualitative is the thing which we do in a company, that how a company is working, what is the leadership, what is the core the program the company is doing. For example, what Infosys do? Infosys do IT jobs. What is IT job? How the Infosys management is, uh, how they are working, basically how they are collaborating with the companies. This is all the qualitative things we consider in the fundamental analysis, and then come up with a quantitative analysis, all the numericals. What is the profit they are earning quarterly by quarterly, year by year? What is the reserve they have? What is the debt they are taking? What is the working capital they are spending? Okay, basically what is the investment they are getting? What is the expenses they are handling? So this is all the quantitative perspective. So now, for quantitative analysis, we need a tool, right? Where we find all the data. We can find the data in the reports. It's very difficult as a common people, non-farm finance people. It's a very complicated process. So, what I am using is this screener. This is a free software. You can use it from a Google by typing screener.com. You can see here. Okay, this is the logo. From here you can find a good companies by typing some criterias. So I will teach you today how to use screener and how you can use screener. Okay, basically this is the front page of a screener. Then this is the feed. So if you put any companies, for example I will put Infosys. If I follow here automatically I will receive Banco products, Infosys. You can see here, Infosys. If anything happens in Infosys, any news, it will come directly here in the front page. So I can click here and read this. Okay. If I am invested in Infosys, I want to get a news from a Infosys. What is happening in Infosys, management, all the things will come in this page, and I can easily access the Infosys news. You can add the numerous stocks here, so you can get the news daily. Okay, this is the one uh, advantage of a screener. Then in the stock for investing. Okay, I have two screeners with me for long term and swing trading. So I will not I am not creating a new screener. I will show my old screeners only to you. Okay, this is the screener. Okay, I gave a criteria for screener that the market capitalization should be more than 500, and the sales growth of a 3 years should be more than 15%. The profit growth of the company should be more than 15% of 3 years, and operating margin should be more than 20%. The return on equity should be more than 20%. The return on capital employed should be more than 20%. The debt to equity should be less than 0.5, and the PEG ratios should be more than less than 1.5. This is the criteria of my screener. So if I give run this query, I got 31 result from this. Okay, basically this is the very good, that if the company is small, the growth potential is high. If the sales growth of 3 years is more than 15%, it's a very good sign. It will grow in the future years also. The profit growth is growing in a 15%. You can do 15%, 20% by clicking here. You can edit 20%, 15%. You can make it 2000. It's all works. Okay, if operating margin is 20%, basically what is operating margin? If I am doing the 100 rupees business and my cost of the expense is 20 rupees, if I am earning 80 rupees after my all spending, so what will be my operating margin? My operating margin will be 80 rupees. So basically the 80% I am earning as a operating margin. This is the thing about the operating margin. And the return on equity is 20%. The return on capital employed is 20%. It's a very good sign for investing. And debt to equity is 0.5. What is debt to equity? Basically, if I'm having a asset of a 1 rupees, I'm receiving a loan of a 2 rupees. It's a bad sign, right? Basically, if 1 rupees is my asset, if I am receiving less than 0.5 debt, means I'm taking a less than a 0.5 paisa, 50 paisa, less than 50 paisas of loan. It's a good sign. So my asset is high, more, and I'm taking a less loan, is a good sign. If my asset is low and I'm taking a more loan or a more debt, it's a very bad sign for investing. This is the simplest thing. And ratio is the price to earning ratio with respect to growth. Okay. In P ratio, I think I will tell you in future videos. The P ratio is very. I will tell you how to enter and exit the stock with the help of P ratio. And okay, that's it. That's enough. And I got these stocks. After that, what you can do is click every stocks. Okay, the Varun Beverages. Okay, which is the manufacturer of PepsiCo in India. Okay, you can click read more and read all the things about the Warren Beverages. After that, you will get to know the snapshot of the Warren Beverages after reading this. So, Warren Beverage Ltd Limited has been associated with PepsiCo since the 1990s, and it is a key player in the beverage industry and one of the largest franchises of PepsiCo. Basically, this is the information about the Warren Beverages. So read this. After reading this, you will get to know about company. Then you should come here. The PE ratio is 54.9 and the industry PE is 84. So it's good sign of the company. If the PE ratio of the stock is less than the industry PE, is it's a very good sign. It's a green flag. Okay. Then the debt to equity. What is the debt to equity? As I told you before, the loan or a debt taken by a company with respect to 1 rupees. Okay. If the asset is 1 rupees, they are taking a debt of 0.12. It's a very good sign. Okay. The promoter holding is 59.8 and the peg ratio is 0.99. It should be less than 1.5, as I said. Okay. After that, read these pros and cons if you want. And these are the peers of the companies. Okay. You will get to know what are the peers for the Varun Beverages. You will directly you can see in this screener. Basically, this all information is taken by a financial report from a Warren Beverages, so you can trust it. Now I will tell you what are the things you should consider while investing. Okay, because we have the many numbers here. The quarterly results are there, profits are there, balance sheets are there, ratios, shareholding patterns, the documents are there. So I will tell you simple thing how you can analyze the stock in a very simple way. Go to the profit and loss. The profit and loss and the quarterly result look same. You can see sales, expense, operating. Okay, basically it's a quarterly results. You can see June, September, December, March of this is 2022, 23 and 24 and 25. This is the quarterly results and this is the yearly results. We will see the yearly result. If you are investing for a shorter time frame, you should see the quarterly results. And if you're investing for a long term, you should select and look into the profit and loss statement of a yearly. Okay. Now, just in a simpler terms, if what is the meaning? If sales are growing, the automatically company is growing, right? You see from a 2013 to 24, is it growing? Yes, it's growing, right? We also gave a criteria that our sales should be growing in a percentage of 15%, I think. So we already gave, that's why it came. We almost have a 6,500 plus companies in the NSE and BSE. So we took only 33 to 35 companies, I guess, from our screener. Okay, the sales is growing, it's a very good sign, and the expense should be less year on year. Okay, is it expenses less? No, the expenses are more. You can see where they are spending, because nowadays Varun beverages are facing losses because of the heavily competition by, I think, Geo's uh, drink. Then the new the cold drink is came from Reliance, so that is the thing why they are spending so much money on the advertisements and all. That's why the expense is high. This is a bad sign for the companies. Okay, as I said, the sales are increasing, the expenses are increasing, the operating profits are increasing. Then see the operating margin what they had. So basically, in average, they have 20 to 25% operating margin. Okay, it's not increasing after take 5 years. Okay, from 2021, 19, 22, 23, 24, 24. Okay, it's good one. What is the net profit? Is net profit is increasing? Yes, if the net profit is increasing, it's a good sign. After that, you should come to balance sheet. In balance sheet, see two things, mainly two things. One is reserves and another one is borrowing. Is reserves are increasing? See, reserves are increasing, it's a very good sign. If the borrowings are getting decreasing, see, okay, the borrowings are getting decreasing and the reserves are getting increasing. It's a very good sign for a company. In any company, I am not telling about only about the Orient beverages. Consider it for all stocks. Click on the stocks which got we from 33 companies. Then apply it this strategy to all the companies, and you will get a good companies. Okay. After that, come to shareholding pattern. Okay, you should see is promoter holding is decreasing or increasing. You can see the promoters are selling their stakes year on year. It's a very bad sign for a company. If the promoters are not holding the shares within themselves, you can see they don't have a confidence to hold the company, and the publics are buying. Yes, the public's holding was 6% in 2022, and now it got 7.80. So the public are buying the shares and the promoters are selling the shares. It's a very red flag for the investors. So like this, you can analyze the stocks from a screener, and we will see another one stocks from our screener. So like this, you should do all the 33 stocks, 31 stocks, sorry. Okay, next click on these stocks and see what is industry PE, what is stock PE, read about section. You can see charts over here, but I'm recommending to see charts in trading view. And see, you can see peers, and you can see quarterly result here, and the profits are increasing, the expenses are decreasing, the operating margin is constant, the net profit is increasing year by year. It's a good sign. The imbalance sheets reserves are increasing. Yes, the borrowings are getting lesser. It's very good sign. Okay, the promoters are constant. Yes, it's a very good sign. The FIs are increasing. Yes, they are increasing. The publics are have lesser stake. It's a good sign. It's a very good stock to invest. Okay, this is not a recommendation. You should do a thorough research on it. I'm going very fast. This is the video how you can use screener for a fundamental analysis. Okay. Okay, that's it for the day. Thank you so much. See you in next video.